Welcome to the channel, Ahilan here, and in today's video we're going to be talking about taxes and small businesses. So this is not the most appealing or exciting topic to talk about, but it's something that needs to be discussed, especially if you want to become self-employed or a business owner or an entrepreneur for that matter. This is just one of those things you need to familiarize yourself with, and the sooner the better. So without further ado, let's get into the video discussion. So a disclaimer, I am not a chartered accountant or a tax professional. I'm just an ordinary guy who has some knowledge in regards to taxes. Do not use this video to replace professional advice. Always seek professional consultation with a certified accountant or tax professional. The scope of this video is primarily to discuss taxes within North America. I personally reside in Canada. Canada and America have similar tax regulations. I cannot cover every country, nor do I know the tax laws of each country because they all vary. If you have any questions, please seek professional help. I will not be able to answer your unique questions as I am not your accountant, or I am not privy, nor do I know your unique circumstances that surround your tax situation. So, small business tax tips. So I've mentioned this before in other videos. Business is not about how much you make, but how much you keep after taxes and expenses. You should always be focused on your net profit and not be overly focused on revenue. So to find your net profit, that's expenses minus revenue, and then you have your net profit. Now, we always see these Shopify or dropshipping gurus who provide dashboards that show inflated numbers of their revenue, but it's very misleading when they do this because they're showing the revenue and not their actual net profit. And as I told you before, dropshipping is a very low margins kind of business. So if they show you maybe, let's say 50K after expenses, they're probably only netting 3 to 5K. There are some high-end dropshippers that may do 10K a month, but that's far and few in between. But the point is, it's very misleading. So it's what you take home that matters. So there are different types of business structures. So you have a sole proprietorship. So you're taxed at the individual level if you choose to be a sole proprietorship. And a sole proprietorship is basically you're your own business, right? You're not a corporation or anything like that. You're just your own business. You do have tax write-offs, but you're taxed at the individual level. Your tax write-offs are things that are related to business-related expenses. So partnership is similar to a sole proprietorship, but it's just you're among partners. So let's say you have a friend who's in your partnership, so it's a two-way partnership. So you're taxed like the sole proprietorship at the individual level, but let's say you make $50,000 a year, you're only and then you split the 50,000 25 a piece. You're only taxed at that $25,000 portion that you've taken. So that's a partnership. And then we have LLCs and corporations. So that's taxed at the corporate level. Now in Canada, we don't really have LLCs. We have corporations. So I myself, as I told you before, publish under a corporation. And then we have a C Corp, which is also taxed at the corporate level, and an S Corp. So C Corps and S Corps are morely found in America. We don't really have that here in Canada. So the difference between a C Corp and an S Corp is just the level at where they're taxed. So a C Corp is taxed at the corporate level, and an S Corp is taxed at the individual level. So this is also known as a pass-through entity. So the shareholders of the S Corp are taxed, and it's not at the corporate level, it's at the individual level. So for instance, real estate companies love using S Corps as pass-through entities because they're not taxed at the corporate level. It's only the shareholders who are taxed. If that makes sense. Again, I'm just trying to give you a general overview of small business tax tips and business structures. If you want professional advice and insights, you're going to have to talk to a certified accountant and or a tax professional. So a sole proprietorship, if someone were to sue you, so a litigator or a prosecutor or whatever, somebody sues you for whatever reason, you're personally liable. Partnerships, you and your partners are liable. So if you and your friend go into a partnership and you get into some trouble and somebody sues you, guess what? You and your partner are now liable to be sued. With corporations, you are not liable personally. So with corporations are separate legal entities, and because they're separate legal entities, they are treated as separate like a separate individual in a sense. So let's say your corporation gets sued, you're not liable personally, right? Whereas a partnership and sole proprietorship, you are liable personally. But with corporations, it's your corporation who's being sued, so the only thing the litigator can touch is your corporation assets. They cannot touch or get to your personal assets. So tax rates. Individuals are taxed higher than corporations. So here in North America, corporations do pay lesser tax, and the reason why governments do this is because it's incentive for corporations to stay within the country to do business so that they can create more jobs, and therefore it's better for the economy. So as I mentioned before, in North America, corporations pay less tax and they are considered separate legal entities. So from a legal standpoint, your corporation is a separate legal entity. So when you file to get a corporation, that little document you get, that's the proof of your corporation being a separate legal entity. So small businesses, which are corporations, pay anywhere between 15 and 17% tax rate. Now, this changes every single year, but it's between 15 and 17%. So here's an interesting breakdown I want to give you. So an average individual who makes $45,000 to $73,000 is taxed at a 30% marginal tax rate. A higher earning individual is taxed between that's between $73,000 and $91,000. So they earn between $73,000 and $91,000. They're taxed at a 34% marginal tax rate. Now, if we go to the top earners who do $100,000 or more, they're taxed between 40% and up, so that they are taxed a significantly higher amount marginal tax rate for individuals who earn six figures, right? Whereas corporations are only taxed between 15 and 17%. So 40% is huge, is a huge chunk of money. So here's a scenario I want to give you a more clear picture of how things work. So you make $100,000, six figures a year as an individual. In Canada, you're going to lose up to 40%, upwards to 40%. I believe it's actually 43% to the tax man. So you only take home about approximately $60,000 after taxes. But at the corporate level, if you make $100,000, you're taxed at a corporate rate, which is 15%, as I earlier mentioned. So you take home around $85,000. So as you can see, there's a huge discrepancy and a significant difference between an individual and a corporation in regards to their tax rates, right? 60,000 versus 85,000, So here are the advantages of having a corporation. So one, you pay less taxes, obviously. You can write business-related expenses off, so like travel, food, transportation. So if you're a YouTube vlogger and you travel for your business, that's a business-related expense, you can write off your travel ticket, so your plane ticket. You can write off restaurants, so when you go out for your meals, so any restaurants you go to. So transportation, you can also write off your mileage, your gas, your insurance, and even you can even completely write off your transportation with leasing your car for your corporations. So another advantage is you pay yourself first before getting taxed. A corporation is considered a tax deferral vehicle. So unlike an employee, you're taxed right away, right out the get-go. But as a corporation, you pay taxes after all your expenses and you pay yourself first. So again, it's a tax deferral vehicle. So liability, that's another huge one I mentioned earlier. You're a corporation, so therefore you're separate. Your corporation is separate from you. So if your corporation gets sued, the litigator, the person suing you, cannot touch your personal assets. So as I mentioned earlier, your corporation is separate from you personally. So here's some important things to know. Always keep records of your transactions in case of an audit. So the tax man can always come around knocking and start questioning if your expenses are legitimate, or just ask you proof to show evidence of your expenses. So that would be receipts, bank statements, etc. So another point I want to point out is not all accountants are made equal. I personally had to go through many accountants before finding the one, right? I found the diamond in the rough, so to speak. So you have to go through a bunch of accountants. You want to make sure you you choose the best accountant for your tax situation, and you want an accountant who's gonna go up to bat for you. You want an accountant who's gonna make your life a lot easier, and who's not gonna really take the burden off you. So again, it took me a while I went through a couple accountants, but I found my accountant. And you're going to have to go through the same process of just trying to find the best accountant that suits you. The best thing to do is go off referrals. I got a referral to this accountant. So I currently use this accountant, and I'm very pleased with this accountant that I have. So you want to, and the next point I want to bring up is you want to figure out what legal structure is best for you. This is not a one size fits all thing. So everybody's unique situation will differ. So for me, I found that a corporation was best for me. I personally had experience prior to opening up a self-publishing business. I did I did have a security business. I'm not going to go into details about that. That's beyond the scope of this video. But because I did have that experience, I was familiar with it, and therefore it was in my best interest to have a corporation, because again, that was my unique situation, right? So withholding tax, I thought I might as well add this point in because Amazon does have a withholding tax. So to find out if you're eligible under the bilateral agreement. So the bilateral agreement is an agreement between you and Amazon, which Amazon is located in America. And this bilateral agreement states that you pay a 0% withholding tax. And this is totally dependent on the country you reside. So again, you're going to have to talk to your accountant about this, or your tax professional. So Canada is a part of the agreement with the US, that therefore I pay 0% tax withholding. I know there are people from other parts of the world, like India, maybe Nigeria, and other countries that don't have a 0% tax withholding rate. I believe it's they have to pay some tax withholding. And again, this is totally based on your country's stance in the bilateral agreement with America, with the US. So again, you're gonna have to talk to your accountant about this. So there are different methods of paying yourself when it comes to having a business. So you can put yourself on payroll, so that's a salary, or you can pay yourself through dividends, which is a shareholder, which is basically you having shares within your company and you're getting paid shares of that companies, which are dividends. And then there's also a salary and dividend combination. Again, this is something you have to go over with your accountant, but there are many pros and cons and advantages and disadvantages to each of these methods of paying yourself. So for example, with a salary, you can pay yourself and put yourself on payroll, but then you have to pay, in Canada, we have something called employment insurance, EI, we have CPP, so the Canada pension plan, we have to pay into that, and then we have to pay a federal tax as well. But the good thing about that if you pay yourself a salary, that offsets your corporation tax liability, because now your salary is an expense to your corporation, so therefore your corporation pays less taxes. Then there's dividends, which is, I believe, up to $40,000. You can get paid, you can pay almost tax free. Now there's two types of dividend payments. There's a public and a private. I personally pay myself a private dividend. By private dividends, and public dividends are dividends that are available, publicly accessible, so that's on the stock market, etc. Private dividends are more like private corporations, which I have a small business which is a private corporation. And then there's a salary and dividend combination. That's pretty self-explanatory. And again, you want to talk to your accountant about all these things. And I know this may seem overwhelming, but again, I just want to give you a brief overview of taxes and business. So business conduct. So you always want to have good record keeping and bookkeeping. So QuickBooks is a good software to use. I'll leave a link in the description for QuickBooks. It's a good software to use starting out. I'm not gonna lie to you, when I started out, bookkeeping was definitely my least favorite part of business. I eventually I eventually handed everything to my accountant. So my accountant does everything for me. So that's my tax return, that's bookkeeping, that's record keeping, everything. And then I also have a dedicated server where I upload all my documents. So all I need to do is, at the end of the month, I just upload all my expenses and documents, and my accountant takes care of everything. He compiles all the data, he does the bookkeeping, the tax returns, everything. So you always want to keep your receipts for expenses, because You never know when you can get an audit. If your taxman decides that they want to audit you, they can do it at any time. And in Canada, we have the CRA, which can audit us up to 6 years. So you want to keep your receipts for 6 years, and you want to keep both physical and electronic copies. So if you have a physical copy, a good idea would be scanning it and uploading it to your computer, to your OneDrive, or to a dedicated server if you have one. So never outsource accounting. I had someone ask me one time if they could outsource their accounting, and my answer is no, don't do that. Taxes are such a delicate subject and also contain sensitive information about you. You do not want to outsource your taxes to someone in a different country, because remember, your taxes differ country to country. You need a professional for taxes, so a professional accountant to do your taxes. So you want to hire someone who practices within your country of residence. It's never a good idea to outsource this. And yeah, so that's for business conduct. So business is a team sport. I highly recommend having an accountant, a lawyer, or paralegal handy. When you're getting into business, guys and girls, you always want to have a good team working with you. So that's having an accountant, a lawyer, a paralegal. The fact is, we won't know everything, and trying to do everything yourself is just going to lead to a lot of trouble and a lot of headaches and a lot of mistakes. So you want to be able to pay premium dollar for the best accountant and the best paralegal or lawyers that you can get your hands on. Because at the end of the day, it's these people, these professionals, I should say, who are going to help you save money and obviously make and keep the most amount of money at the end of the day. So here's the thing. Everybody pays taxes. Taxes pay for roads, infrastructure, benefits, and policies your country of residence have. So you will never be able to completely escape taxes, but you can mitigate the amount of taxes you pay. Like I said, having a corporation is a tax deferral vehicle that you can use to mitigate your taxes. So the only exception is if you live in a country that has no state income tax, such as Dubai or any of the 7 Emirates. Again, that's beyond the scope of this video, but there are some countries that do have 0% income tax rates. And I would never. Well, no, I mean, if you're born there, that's a different story. But usually you have to be a multimillionaire to live in countries like Dubai and the 7 Emirates. Otherwise, the living standard there is quite expensive. And there are things you can do, like relinquishing your citizenship within your country. Let's say you're American or Canadian, and then taking residency in Dubai. But again, I would never recommend doing that, because you're going to lose out on a lot of privileges and benefits to your native country, and you may have to pay a huge exit tax, because the taxman is always going to look for ways to make you pay taxes. And yeah, again, that's beyond the scope of this video. So that's going to be all for this video. Again, I know it may have been a bit overwhelming, but I just want to hit different points, and the main points were just, the different tax corporations, the tax corporate structures, different business structures, different tax rates, and business conduct. So that's going to be all for this video. I hope you found it insightful and helpful. Again, you want to seek professional guidance and help when dealing with business and taxes. I can't give you advice because I'm not a professional accountant or tax professional for that matter. So that's going to be all for this video. If you found it helpful, again, like, subscribe, and share. And thanks for watching. I'll see you in the next video.